Good morning, everyone. It is your daily crypto news for Thursday, September 7th, 2023. My name is Matt. You know the drill. Wherever you're listening to this podcast, 5 stars, please. Leave us a comment, share it with your friends, put it on Facebook pages, put it on your Twitter, all of that good stuff so we can get more people listening to daily crypto news to prepare for the bull. It is coming. Speaking of the bull coming, Cathie Wood is not sleeping at the wheel. Cathie Wood's ARK Invest just moved to establish America's first spot Ethereum ETF, not Bitcoin, Ethereum ETF. And this is according to a filing with the SEC. The ARK 21 shares Ethereum ETF is an application that resembles the Bitcoin spot ETF. Other companies are likely to follow in ARK Invest's footsteps quite quickly. Wouldn't surprise me if tomorrow I'm saying Fidelity and BlackRock and DCG and all kinds of applications flooding into the market. And more than likely, somebody read this and figured this out way before we did, and the applications are already being submitted. The Financial Accounting Board on Wednesday unanimously approved new rules for valuating crypto assets in the company's financial statements. Members of the board approved a standard mandating that companies use fair value accounting for Bitcoin and some other crypto assets. Both public and private companies will be required to separately disclose their crypto assets in their financial reports, whether they are quarterly or annual. These assets can no longer be grouped with intangible assets like patents or trademarks. Additionally, businesses must account for gains and losses on their crypto assets within their net income. And you're probably wondering, what the hell does all that mean? Well, first of all, let me tell you that Michael Saylor, the CEO of MicroStrategy, is bullish on this, saying fair value accounting is coming to Bitcoin. This upgrade to the Financial Accounting Standards Board accounting rules eliminates a major impediment to corporate adoption of Bitcoin as a treasury asset. And you're again wondering, what the hell does all that mean? Well, James Lavish on X, at James Lavish on X, he had a Twitter thread explaining all of this and asking those same questions. Is it a Twitter thread or an X thread? We don't know. Who the hell cares? Let's read this. He tweeted, "As investors, why do we care?" That's a great question. Because the SEC recognizes the FASB as the official accounting rule maker for the U.S. public companies. If companies do not follow GAAP principles, they are out of compliance, and no respectable accounting firm will certify their financials as correct. Long-lived intangible assets. At the heart of why the latest FASB ruling matters for Bitcoin is the long-term intangible assets. See, FASB originally determined that Bitcoin was to be considered a long-lived intangible asset, much like a patent, copyright, or trademark. This creates a problem for when the asset is accounted for on the company's balance sheet. Keeping it simple, say a company buys a drug patent from another company for $100 million. The company lists it as a long-lived intangible asset on its balance sheet at the purchase price of $100 million. Let's say another company then creates a better drug, making this patent worth less than the purchase price. The original patent is said to be impaired in value, and the patent investors now say it's worth only $50 million. The company must list the patent on its balance sheet as a $50 million asset and recognizes a $50 million loss. Then, let's say that the new drug ends up not working and is taken off the market. People then turn back to the original drug, restoring its $100 million value. As far as the FASB is concerned, too bad. It has been impaired. And until the company sells the patent, the asset must be held at the impaired value at $50 million. He says, note that this example purposely ignores amortization to keep it simple. Okay, so let's move on. Then, how does this affect a Bitcoin and companies buying Bitcoin with their extra cash? Let's see. The main problem with treating Bitcoin as a long-lived intangible asset is that it actually is a liquid asset that trades on exchanges daily, 24 hours a day, 365 a year. Bitcoin's price is continuously updated. Though Bitcoin is not a security, it trades even more often than securities. Plus, Gary Gensler, the chairman of the SEC, has stated that he considers Bitcoin a commodity. It goes to reason, therefore, that Bitcoin should be treated like any other tangible commodities, gold or oil. Yet, the FASB initially decided that Bitcoin should be considered as a long-lived intangible asset. What this means is if a company buys Bitcoin, it must list it on its balance sheet at the lower amount of cost or market value. For example, a company uses some extra cash to buy $1 million of Bitcoin and lists the holding as a digital asset on its balance sheet worth $1 million. Then Bitcoin price goes up 20%. In its financials, the company cannot recognize this increase and must maintain Bitcoin at $1 million. Then, let's say Bitcoin falls 50% and it's now worth 60% of where the company bought it. This kind of confused me for a minute, so I'm going to explain it to you. It went up 20%, $1.2 million. The original purchase price was $1 million, and then it went down 50%. Now it's sitting at $600,000. So let's continue. In its financials, the company must recognize this decrease as an impairment in value and list Bitcoin hodlings at $600,000 with a $400,000 loss. Even if Bitcoin trades back up, $600,000 would remain the carrying value for the company's balance sheet going forward. The only way to recognize this price recovery is to sell Bitcoin and trigger capital gains. This is exactly what happened to MicroStrategy. Michael Saylor bought billions of dollars in Bitcoin, the price increased, and he had to hold the Bitcoin on MicroStrategy's balance sheet at the purchase price. Then, when Bitcoin fell in value, MicroStrategy had to recognize the impairment and list the loss. So you see how this totally changes. I think you probably got this already, but I'm just going to say it one more time. Imagine you have a net worth of $1 million because you have $1 million of Bitcoin. Bitcoin falls 50%. Now you have a net worth of $500,000. You're trying to get loans, you're trying to do business, you're trying to leverage your assets, but it doesn't matter if Bitcoin goes back up to $1 million or if it goes up to 1.5 or $2 million. On your books, it still says $500,000. So you see how this changes the game. The implementation of the new standard is set to take effect on annual reports beginning in 2025, although you can adopt this earlier. Beijing-based social media app Weibo, basically is the Chinese Twitter, or X, has removed 80 popular crypto influencers in compliance with China's strict crypto crackdowns. The influencers each had around 8 million followers. The social media giant has removed these accounts as part of the larger cleansing of misinformation on its platform. The Fed hit alleged crypto conman and ex-CEO of Celsius Network, Alex Mashinsky, with 7 criminal charges in July.
Oh, damn!
And now they're gonna freeze his assets. The court order filed yesterday shows that the Department of Justice has ordered Mashinsky's numerous bank accounts frozen. The filing orders that no money shall be able to leave the bank accounts at Goldman Sachs, Merrill Lynch, First Republic Securities, SoFi Bank, and SoFi Securities. And why did it take this long? He could have been moving money all over the damn place in this time. Good. It also mentions a Texas property owned by Mashinsky and his wife, Christine. Ultimately, it looks like Alex Mashinsky pocketed around $42 million by defrauding Celsius customers. Decentralized exchange BrianFi has raised $16.5 million at a valuation of $100 million in an investment round led by Pantera Capital. This funding round is notable given that venture capital for digital asset firms has mostly dried up, with cryptocurrency and blockchain startups receiving 76% less investment in Q2 of 2023 than the same time last year. On Wednesday, collapsed crypto company Genesis Global filed 2 lawsuits against DCG, or Digital Currency Group, and Digital Currency Group International, demanding the repayment of over $600 million in loans, including $115 million in Bitcoin. If you guys remember, Genesis was in trouble because it served as the primary lending partner for New York-based crypto exchange Gemini. It owed users of the high-yield saving product Gemini Earn $900 million. And finally, the Biebs is in the news. Justin Bieber will have one of his hit songs turned into an NFT, which fans can invest in for a share of the royalties. This song is a song from 2015 called Company, and it looks like he's just trying to breathe new life into old songs that aren't paying as well as they used to. So fans owning this NFT can now participate in a 1% royalty share in the streams of the song. And this is basically the hopes for the future in 2017. Back then, we were talking about this quite substantially because I thought it was a great idea. The whole idea was, and I think that Jay-Z and Timbaland and other artists were trying to think about how to do this, and we had hopes that they were going to do this, is that you would pay for the upfront cost of the production of a new song. For example, if the production was, say, $3 million, you got the good producer, Rick Ross come in here, drop some bars, you help pay for marketing, there's no cost on the artist or the studio, and you just raise the money via an NFT or some kind of ICO or some kind of decentralized process. Then everybody has part ownership of the royalties of the song, and then it goes out and you get paid on the back end. It's a great idea. It allows for great production, great quality production, and allows everybody to make a little extra money on the side. it never actually happened. And this is probably just because if you are billionaires or you have big money into like production studios or whatever, then you don't really need to take money from people. So you don't really care. And you're not going to risk it because you're going to make this standardized cookie cutter bullshit that you know is probably going to slap in the charts, right? So anyway, it didn't happen, but it looks like Justin is taking a play from the playbook of 2017 to try to pump some new life in an old song. Now let's see if there's any life in that crypto market.
Here comes the money.
Here we go. Money talk.
And the time is 11:18 a.m. Eastern Standard Time. We have the Fear of Greed sitting at 35. Bitcoin sitting at $25,771, up 0.9% in 24. Ethereum is at $1,630, up 0.7%. Tether's number 3. Binance is at $214.65, up a half a percent. And XRP is touching 50 cents, up 0.3%. Rounding off the top 10, we have USDC, Cardano, Dogecoin, Solana, and Tron. The total market cap is sitting at 1.04 trillion, up 0.6. We have a Bitcoin dominance of 48.3, a ETH dominance of 18.9, and our 24-hour volume is up 6.75%. And that was our news today. I hope you're having a great Thursday, and I'll see you tomorrow with more crypto news and Asia focus with Sarah JK Remote. Until then, happy hodling, everyone.